Good morning, ladies and gentlemen. My name is Vasil Dikov. I'm a Senior Account Manager with GDMFX, and I'll be bringing you today's market outlook. We will start with the North American markets. The retail control was 0.2% weaker than expected at 0.1%. The retail sales for the month, excluding autos and including them, were 0.4% weaker than expected at 0.3% and 0.2% weaker than expected at 0.2%. The 10-year note auction was 0.130% less than the previous time. The beige book, the US economy, continued to expand from the late February to early April, and low employment appears to be spurring an upstick in wage growth, the Federal Reserve said on Wednesday. Pay increased in all but one of the Fed's 12 regional bank districts, and several reported signs of pickup in wage growth, the US Central Bank said in beige book report of anecdotal information collected from business contacts nationwide. The Fed has signaled caution in lifting interest rates this year as it waits to see if the nation's economy can shrug off slowing global growth and risk posed by strong dollar and sustained period of low oil prices. The Dow was 19 points up, the Nasdaq was 60 points up, and the Dixie was up to 95 from 94.60. The US dollar was 50 pips up versus the Canadian dollar, 115 pips up versus the Swiss franc, and 75 pips up versus the Japanese yen. From Canada, the Canadian dollar retreated Wednesday amid a pullback in oil and gold prices and reassurances from the Bank of Canada that it will leave its key interest rate unchanged. It has been kept at 0.5%, predicting that the economy will grow by 1.7% in 2016, up from its January expectations to 1.4%. The governor of the Bank of Canada isn't letting some recent bright spots sway his cautions with view on the economic recovery. He's focused on the long-term statistical trends in trimming the central bank's view of 2017 economic growth to 2.3%. And he said, "I think it's important that we not get carried away on just a few short-term indicators," he said. The fact is that we've been psyched out by volatility before, both on the upside and on the downside. Today we'll be waiting for the initial and continuing jobless claims, the CPI index for the month and the year, the CPI index excluding food and energy, the CPI index NSA for the month, and the CPI index core SA for March. In Europe, the EURIndustrial production for the year was 0.8% weaker than expected at 1.2%, and the industrial production for the month was 0.8% weaker than expected at minus 0.7%. The DAX 30 was 233 points up, the CAC 40 was 132 points up. The euro dollar was down with 103 pips, the euro was down with 217 pips versus the Aussie and 124 pips versus the Kiwi. Today we'll be waiting for CPI data from Europe for the month and the year. Moving on to the United Kingdom, the RICS housing price balance was 7% weaker than expected at 42%. Now, the Brexit's long shadow is affecting every aspect of British economic life. Housing prices dropped to a record low. The Bank of England is hesitant to announce any clear path for economic recovery prior to June the 23rd, and the Monetary Policy Committee can't afford any move in terms of hiking interest rates as the economy and global investors are concerned with the upcoming uncertainty with the referendum. Mark Carney has named Brexit the biggest domestic threat and with the current account widening, Britain is becoming increasingly reliable to the kindness of strangers, he said. Despite all that, there is some light in the end of the tunnel. Inflation picked up at a record pace of 0.5% after hovering around zero for over a year. The Bank of England officials will be waiting to see if this reflects on earnings and then incorporate the data into their decision-making process. The FTSE 100 gained 113 points and closed at 6,312 yesterday. The pound was 80 pips down versus the Kiwi and 145 pips up today. The pound versus the US dollar was 77 pips down yesterday. It's 50 pips down during the Asian session today. The pound versus the Swiss franc was 80 pips up yesterday. Today we're going to have the Super Thursday, and this is going to cause a lot of volatility in relation to the British pound. Moving on to Japan, the foreign bond investments was 380.2 billion yen, better than previous at minus 1,175.3 billion yen. The foreign investment in Japanese stocks was 268.7 billion yen, weaker than the previous at 146.5 billion yen. The Bank of Japanese Governor Kuroda said in a Q&A session in Columbia University in New York that he does not believe that the negative rates approach has backfired, and if they haven't introduced the QQE With negative interest rate, financial markets in Japan would have been even worse. Kuroda, who is in the US for a spring meeting with the International Monetary Fund and talks with colleagues from the group of 20 nations, reaffirmed his belief that his monetary policy is having the intended effects and will be in time to spur inflation to 2% target. The Bank of Japan will add to stimulus without hesitation if needed, he said. The governor also reiterated that the Bank of Japan isn't targeting currency markets with its policies. From China, Chinese investors are getting hungrier for real estate in Canada, where foreign demand has fueled record price gains and made million-dollar homes the norm. In cities such as Vancouver, inquiries are up with 134%. The Nikkei 225 was 512 points up yesterday, going up today more than 1,000 points for the week already. Moving on to the Pacifics from Australia, participation rate came out same as the previous, but weaker than expected. Unemployment rate was 5.7% better than expected. Unemployment rate at 26.1 thousand, better than expected with 20,000 and way better than the previous of minus 0.7 thousand. The high-yielding condos were on the uptrend yesterday as to why the Aussie was the chosen one during the morning London session. That may have been due to the Forex traders pricing in the jump in Australian business confidence and revealed by the NAB business survey from the earlier session. Australia's business confidence reports from the Australian National Bank revealed a more optimistic business sector. Business confidence doubled from 3 to an index rating of 7, while business confidence shot up from 8 to 12 in the same month. The report hinted that non-mining sectors in the economy are gaining ground and that business outlook has improved despite global uncertainties. That might mean a longer period of no rate cut from the RBA. The Aussie was 90 pips up versus the US dollar. It was up with 85 pips versus the Swiss franc, and the Kiwi versus the US dollar ranged 50 pips yesterday, and only during the Asian session declined with 80 pips. Moving on to the commodity section of the market, crude oil stocks change. Inventories increased by 6.6 million barrels in the latest week, bringing total crude oil stocks to 536 million barrels. Crude futures retreated from 2016 early highs before bearing considerable losses on a volatile day of trading as Saudi Arabia's oil minister brushed off the potential for extensive output cuts among the host of major producers, and investors reacted to a stronger than expected US inventory build last week. Saudi Arabia's energy minister Ali Al-Naimi downplayed prospects of coordinated production cuts between Russia, Venezuela, Qatar and the Saudi Kingdom at the highly anticipated meeting in Doha on Sunday. Crude prices fell in Asia on Thursday as investors reacted to reports that efforts to freeze production will not be easily agreed. Gold moved further back from the previous day's 3-week high on Wednesday as the dollar rebounded and European shares surged as upbeat Chinese trade data boosted risk appetite. The S&P 500 index had a range of 22 points up to 2,073 right now. Gold had a range of $17 down to $1,233 right now. Silver had a range of 33 cents at $16 right now. Crude had a $1 range at 41.18 going down right now. And natural gas is trading at $2 at the moment with a range of 4 cents. Thursday we're going to have the EIA natural gas storage change, and on Friday as usual the Baker Hughes oil rig count. That is all from me. Thank you and have a nice day.